So the topic that we choose is that Maybank's personal loan. But first of all, what is annuity? Annuity is a series of equal payments that is made at equal interval of time. And whenever there is a financial arrangement, there will be where annuity actually exists. Meanwhile, in loan, it is frequent to have multiple cash flows with the same amount at a time. As an example, almost all consumer loans and home mortgages feature payments are usually made at each of the month. So, as in the reason for choosing annuity is that annuity is actually a long-time investment that is usually issued or most commonly issued by an insurance company or bank. There are two things that annuity actually provides. First, a periodic payment for a specific amount of time, and the second one is a tax-deferred growth. What actually is a tax-deferred growth is that you actually pay no taxes on the taxes and on the income investment gains from your annuity until you actually withdraw the money.
Assalamualaikum warahmatullahi wabarakatuh. Today I will be presenting the introductions of Maybank. So Maybank, as we all know and we all love, is one of the most frequently used banks here in Malaysia. So as we should know, Maybank was established in 1960 and today is the largest company by market capitalization on the Malaysian bourse. It is ranked first among listed Malaysian companies and among the top 500 companies in the Forbes Global 2000 leading companies of the world. The Maybank Group offers a comprehensive range of products and services that include commercial banking, investment banking, Islamic banking, offshore banking, leasing, and many, many more. Maybank's mission is to humanize financial services across Asia by providing access to financial services to the people at fair terms and pricing, and to be always at the heart of the community. So the next topic would be the relationship between Maybank and the annuities that they provide. So Maybank offers annuities, which are loans that are paid back in or over a period of time. Examples of the annuities that they offer is mortgages, car loans, business loans, or maybe in this case even personal loans. Their interest rate differs for each plan, so it depends on which plan you take. And also if you are interested in investing or looking for a loan or anything similar, you could go on their website and you could see a lot of annuities plan provided by them under the wealth creation section. For this case study, we decided to use personal loan from Maybank to show how annuity is calculated.
For features and benefit, the minimum monthly installment of loan should be RM5,000 ringgit, and as in for the maximum amount, it should be around RM1,100 ringgit. And for the interest rate, you will be charged 8% for loan amount from 5,000 to 20,000, 7% for the amount of 2,001 and 50,000, and also 6.5% to the amount of 5,000, 1,000 to 100,000 ringgit. As in for the benefit, the monthly payment that is required is as low as 102.78 cents per month, and then it requires no processing fee, no stamping, no guarantor or collaterals needed, and then it also has a fast approval, and also it provides you with insurance cap personal protection.
Our problem statement is basically based on real life problems that related to annuity. The first one is Encik Fadli wants to acquire a new car for the family because the existing one has broken down on many occasions. He intends to get a new Proda Atiza. The car's OTR, which is on the road pricing, is 61,500 ringgit without insurance. He intends to take out a bank loan to purchase the car because he does not have the necessary funds. He took out a 9-year loan from the bank at a rate of 2.5% each year. He will only have to pay 636 ringgit and 39 cents each month for the next 9 years if the loan is authorized. although the total amount paid at the end of the loan term is 68,700 ringgit and 12 cents more than the car's initial worth. The bank's loan nevertheless allows him to pay a little monthly payment of 636 ringgit and 5 cents rather than a lump sum payment of 61,500 ringgit. The second problem is Misha wants to start a F&B business after being fired by her company due to the MCO and company's policies. The only problem that's stopping her right now is that she has insufficient capital. She decides to make a personal loan to start her business. She makes a personal loan worth of 15,000 ringgit and repaying the loan in 16 months in total of 5 years. The loan has a 8% interest per annum. With the money she got from the bank, she starts her business and pays the bank 304 ringgit and 43 cents monthly, which she deducts from the profit she got from her business every month. This is the third and the last problem. According to the Central Bank of Malaysia, a house is considered affordable if its cost does not exceed 30% of an individual gross income. The price-to-income ratio should not exceed 3.0, but from 2014 onwards, the range of the ratio is 4.0 until 4.4. With such statement, we learn that most people can't afford to buy a house in lump sum payment. Most bank offers a house loan up to 40 years. If a person were to make a house loan worth of 500,000 ringgit with 3.5% interest rate for 30 years, these are the summary for the repayment. The first one is starting principal payments, which total 787 ringgit. Second one is starting interest payment, total 1,458 ringgit. The third one is a monthly payment, 2,246 ringgit and 34 cents.
Okay, Assalamualaikum warahmatullahi wabarakatuh to my beloved teacher and my other classmates. So thank you to Sharizal for explaining to us about the problem statements that we have related to annuity. So before I explain to you about how do we solve the problems that was explained by Sharizal, I'm gonna show you the formula to annuity. So the formula is A equals to R bracket 1 minus 1 plus I to the power of negative n divided by I, where A is the present value and R is the periodic payment, I equals to K over M and N equals to MT. And in these cases, we are using examples that are compounded monthly. So M is months and T is years. Okay, so for the first problem statements that we have was regarding Encik Fadli that he wants to buy a car for his family. So basically, the present value of the car, the original price of the car is 61,500 ringgit. So right now, what we are doing right now is trying to find how much does he has to pay monthly. So we just fill into the formula. So basically, the present value is RM 61,500 ringgit, and R is the amount that we want to look for. So I minus 1 plus I, which is 0.00208 to the power of negative 108 divided by 0.0208, and then we will get 66.64. And then to find R, we just have to divide 61,500 by 66.64. There we'll get RM 636 ringgit and 39 cents. This is the payment paid monthly by Encik Fadli in order to buy the car. So for the total amount paid, the R, the periodic payment, times with the months of payment, which is N. So it's RM 636 ringgit and 39 cents times by 108 months. We will get RM 68,730 ringgit and 12 cents. So the interest paid by Encik Fadli is the future value, which is 68,730.112 minus the original present value, which is 61,500. This is the interest paid by Encik Fadli. For second problem statement is regarding mortgage loan. So here is the formula written by me, as you can see. So if a person were to make a house loan worth of 500,000 ringgit with 3.5% interest rate per annum for 30 years. Here are the formula given, and we are going to find the amount that the person has to pay monthly in order to make a 500,000 ringgit worth of loan with 3.5 interest rate per annum. So first thing first is you always have to list down the formula, which is A equals to R bracket 1 minus 1 plus I to the power of negative n divided by I. So you fill in with all the data given. So the amount loan is RM 500,000 ringgit, and we are going to find the periodic payment, the payment that the person has to make monthly. So 1 minus 1 plus 0.00292 to the power of negative 360 divided by 0.00292. And then calculate all of this, and then we will get RM 222 ringgit and 59 cents. R, to find R, 500,000 is going to be divided by 222.59, and you will get 2,246 ringgit and 34 cents. This is the amount that the person has to pay every single month for 30 years if the person were to make a house loan worth of 500,000 ringgit with 3.5 interest rate. Okay, for the third problem statement is regarding personal loan. Same thing like the first problem and the second problem, because we are only using present annuity for these cases. So list down the formula that you have, and then we are also going to try to find the monthly periodic payment. So fill in all the data that you have into the formula, and then calculate all of it. You will get RM 15,000 ringgit equals to R bracket 49 and 49.31 cents. To find R, 15,000 ringgit is going to be divided by 49.31 cents, and you will get RM 304 ringgit and 20 cents for R. This is the monthly payment needed to be paid.
So in conclusion, annuities are one of numerous estate and financial planning instruments available. They have their advantages and downsides just like any other instrument available out there. Other than that, we also understand that annuities give us security, growth, and income over time. You have control over how much money you make and how much danger you're actually willing to take. It can also be used as backup for your income, as in when it comes to purchasing or ordering or owning something out of your capital. It can be done this way. So with that being said, that is it for our presentation from our group. Thank you so much for listening, and we'll see you next time.